All right, let's look at a few examples of the money flow index or MFI together in the next slide. Before I explain this example, keep in mind that the phenomenon of positive and negative divergence actually occurs not only in the RSI and the dead, but also in the MFI. It strongly manifests itself, and you should observe this phenomenon in the MFI as well. But before we examine the phenomenon of positive and negative divergence in these concepts together, let's see what the MFI looks like and what signals it can give us. If you recall, we previously mentioned that the RSI is confined between the areas 0 to 100. And there was also a 30 and 70 area, which were important RSI zones. And when the RSI crosses the 30 line from below to above, it gives a buy signal. And when the RSI crosses from the 70 line downwards, the 70 line itself is crossed from above to below, it was a sell signal. However, the MFI is quite similar to the RSI. Here at the bottom, you see the MFI chart, or money flow index, which means you see the money flow index on the stock's price chart. This MFI norm, like the RSI, has areas ranging from 0 to 100. And the two areas of 20 and 80 for the MFI, we can consider them. That is RSI, which had areas of 30, 50, and 70 between the 0 to 100 range. The MFI only has two areas, the 20 area and the 80 area, and the movement of the MFI in different areas also gives you signals. That is, when the MFI crosses above the 20 line from below, meaning here, this is a buy signal. Look, I can see a very strong buy signal, actually, in this area. See, right exactly here, the MFI has crossed the 20 line from below at this specific point. This is a buy signal for me. It's a buying signal. Again, it has gone up, 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 up. Here, it has crossed the 70 line upwards. We don't deal with it here. When it crosses the 70 line from above to below, it gives me a signal here. What is this here, guys? It's a selling signal. It's giving me a sell signal. Corresponding to this, we go up. When we say it's a buy signal here, we mean we should buy around these areas. Now I try to draw it much more precisely. It's giving me a buy signal here. Look, guys, even the stock's price chart has gone lower here. And you noticed it, but you should only sell the stock when the MFI cuts down from above the 70 line. This means then you should sell in these areas. When you sell in an area, it means you are exactly taking this amount of profit from the stock. A stock that you buy and sell based on the MFI is giving you that definitive signal. And you can use this method as one of the technical analysis methods to get a good signal and trade on PASA, the stock's price chart. However, we are not currently concerned with the MFI signal itself. We want to observe the powerful phenomenon of positive and negative divergence on the MFI. In this area, see guys, I have created an upward trend. In this upward trend, I have two peaks here that have actually created two summits for me. These two peaks that have formed here from their engineering connection point have created a line with a positive slope. And corresponding to them exactly on the MFI, a line with a negative slope has emerged. So here we are strongly observing the phenomenon of negative divergence, and from the second peak we should witness a drop in the chart, which has also happened powerfully. Let's look at another example together. All right. Here I observed the phenomena of positive and negative divergence, several instances of positive and negative divergence on the stock price chart. See the Iran Telecommunications stock with the symbol Akhabar, one upward trend. From a certain point onwards, two peaks have formed for me. These two peaks are exactly creating a line with a positive slope. And the two peaks, or several peaks, that we see in the MFI, in areas corresponding to the peaks of our stock price chart, this peak that you actually observe corresponds to it, and a line with a negative slope has formed from the phenomenon of negative power divergence. And further on, Once again, in an upward trend, we see two peaks that create a line with a positive slope. And corresponding to it, a line with a negative slope has formed in the MFI. That's why we are observing the phenomenon of negative divergence there. After that, we should expect to see a decline in the stock chart. And in this decline and downward trend, we see two troughs, where from the engineering connection of these two troughs, a line with a negative slope is formed. And on the MFI, you observe troughs where from the engineering connection of these troughs, a line with a positive slope has emerged. So we have a positive divergence. From here, we should expect to see the stock price chart grow, which has indeed occurred. Let's look at another example together. Well, we don't have any more examples. Our examples are finished. So far, we have examined 3 of the most powerful technical analysis oscillators, MS10, which is actually the relative strength index and MACD1, MACD, and MFI. Now, we want to look at 2 other powerful technical analysis oscillators, SAR or stop and reverse, and ADX or average directional index. Why did I bring these 2 oscillators together? Because when you want to use these oscillators, you must definitely use them together. The average directional index, or ADX, is one of those indicators that helps you find your important SARs in those areas and get signals from them. Using or not using, these 2 simultaneously will not help you, and you must definitely use both together. Let's move to the next slide. We are reaching the summary section. Before I talk about the summary, since we are going to apply SAR and ADX on the stock price chart and on the software, we will teach you in the next video. I will just give a brief explanation about it, and then we will move on to the summary. You see, the average directional index is actually a powerful technical analysis index or oscillator that shows you certain areas. These areas are the main ranges of your SAR, meaning you consider a certain area. With ADX, that area is confirmed for you. The area that ADX confirmed for you, you are only allowed in that area to assess and review your SARs. The areas that ADX does not confirm for you, all SAR signals there have no validity and should not be used for analysis. So my ADX shows the areas related to RSI, the areas related to my SAR, and then the SARs that exist in that area appear at the top and bottom of the stock price chart. I can use them to see what signal we have for buying or selling the stock price chart. Don't worry at all these topics that I'm explaining to you in detail will be completely reviewed together on the stock price chart in the next video, and if you have any ambiguities or doubts, they will be completely resolved there. Alright, let's move on. In fact, a general summary of the oscillators we have learned so far. We have learned 5 of the most powerful technical analysis oscillators. In reality, these 5 are truly sufficient. That is, the indices we mentioned to you and the oscillators we told you about, these are the most powerful indicators and oscillators, no more, no less. Learn these thoroughly, and you can confidently apply them to the stock price chart. One important point you need to know is that oscillators and indicators give you signals then at different times, and after a certain point they expire. You must be aware in overbought or oversold areas, which are emotional zones, not to buy emotionally or sell emotionally. In fact, how should you use these oscillators and indicators? And the explanation I have provided below is the topic that I emphasize a lot, and I have previously explained it in the software module ISWA explanations of the stock price chart. You should try to learn some of these indicators and oscillators, especially those that we teach you in this educational course. However, in the science of technical analysis, we have countless indicators and oscillators, and it is not necessary to learn all of them. Well, with the related topics too. By summarizing the topics related to technical analysis oscillators, we conclude this video. Stay with us for more.